So this is not a video I was expecting to make, but I've been seeing a lot of misinterpretation and borderline misinformation regarding the Coinbase earnings. So I want to share our biggest takeaways from the earnings, not just the call, but also the shareholder letter, what we are doing at our hedge fund regarding these earnings, and some of our biggest takeaways and what these earnings mean for your crypto portfolio. So we're going to get started here by just watching this 2-minute video, or 2.5, almost 3-minute video from Brian Armstrong, because I think he talks about some pretty important things, and sometimes it's important to see the source, see the founder talking a little bit himself. So let's go down here and make this big screen and then just start.
Hey everyone, it's earnings day for Coinbase, and we just reported numbers for Q4 2025. Coinbase is building better financial services for the world, powered by crypto. And our thesis is actually very simple. Crypto is updating the multi-trillion-dollar financial services industry, and Coinbase is the company best positioned to capitalize on this transformation. I want to show you a few highlights and charts from our recent shareholder letter which drive this point home. So first, because Coinbase is the most trusted brand in crypto, we store more crypto than any other company. Assets on platform is how we track this, and it's grown about 3x over the last 3 years. We now store about 12% of all crypto in the world, more than the next 4 competitors combined. And you can see even in Q4, although crypto prices came down, which showed this number lowering, the overall trend is very clear. And this is a big part of what makes our business defensible, since people are most likely to use the financial products where their assets reside. Okay, next up, our crypto trading volume market share doubled in 2025. And when people store their assets with us, one of the major activities they do is trading. And our trading volume actually grew 156% year over year. We more than doubled our market share for crypto trading specifically. And derivatives volume contributed to much of this growth. In December, we announced the launch of the Everything Exchange as well, where you can trade stocks, commodities, prediction markets alongside millions of crypto assets all on one account. So this is setting us up to continue this strong growth into 2026. Next, we've made major progress diversifying our revenue beyond just trading. And you can see that as of 2025, we now have 12 products over $100 million in annualized revenue. We're really building a complete set of new financial services powered by crypto to improve our customers' lives. And a big one of those is actually around stablecoins. So next up, we're going to talk about stablecoin adoption. You can see that in Q4 2025, we hit all-time highs for USDC held on Coinbase and overall USDC market cap. Stablecoins and payments are really the second killer app in crypto, and most people are still, I think, underestimating the potential of a digital dollar. We're going to make major investments in this in 2026 to continue this trend. And then finally, subscription and services revenue reached an all-time high, up 5.5x since the peak of the last bull cycle in 2021. We've made major efforts here over the last few years to diversify our revenue beyond just trading fees, and you can see this showing up in our subscription and services revenue as well. We reached a $2.8 billion number in 2025, and this has been compounding at a 53% annual growth rate since 2021. So in conclusion, crypto prices have been volatile recently, but we're used to building in all market conditions, and we actually love the opportunities that these market conditions create. We're going to continue buying Bitcoin, buying back our stock, and building better financial services powered by crypto. For more information,
guys, those last 2 points, buying back their stocks and buying crypto, is huge. We don't want to overlook that point. Now, a lot of people are looking at their earnings and they're seeing one thing and one thing only, that their earnings was down negative 667 million in Q4 2025, right? That's the earnings that just came out. In reality, this was a gap write down on their Bitcoin holdings, their personal holdings, not just holdings for their clients, right? In reality, they had 178% profit. They had 9% year-over-year growth. They own 12% of crypto holdings worldwide. They have 12 products making over 100 million revenue. I didn't even write that down. That's super important. They have a massive free cash flow of 2.4. So there's always 2 things I look for a hedge fund when we make investments. We want to see a moat. They have a huge moat. They have that regulation. They have that huge 12% crypto holdings. Good luck trying to get into that. And then that free massive cash flow. The second thing we look for is solvency. This company is absolutely not solvent, but they were expensive. We don't hold any Coinbase because they were expensive, but they have that 12 billion in cash. So they have free cash flow. They have 12 billion in cash. And this is my favorite part, because this used to be my least favorite part. They right now are doing a $2 billion plus share buyback program, plus accumulating Bitcoin. This was supposed to say Bitcoin. I think there was an autocorrect here. So that's why there's a lot of fear mongering. You'll see different people just saying, oh, they had a negative quarter, crypto is crashing, it's no longer interesting. Like, yes, crypto is crashing and entering a bear market, but no, they did not have a negative quarter. They are making tons of money. This is like, being, I don't know, like having a job. You make your money from your job, and then your investments are currently down because there's a bit of a bear market going on. There's two different things. You're still, net making money. Your cash flows are positive, and that's something that I've just been seeing again and again online. It was kind of making me go a little bit crazy. Okay, anyway, so big crypto sell-off. And right now I think crypto's bottom might not be totally in. I mean, there is, at the end of the day, a potential bear market that we're approaching, and crypto has had this big sell-off. We're now consolidating right here in this area, and this is what we were talking about already on our live stream, that this is where a former floor was, and there's a good chance we're going to bounce. So we did initiate a little bit of a trade, not an investment in here, but that trade is already closed, and that was just a double bottom bounce. That's why we tried that one. And this ticker is down like 66 from its all-time high. So right now, I think is a good accumulation phase or something. And this is not financial advice, but this is what we're looking for as the bear market continues. These are the numbers we've been waiting for to start accumulating, and this gets us pretty excited. Now, I do want to just highlight a few points here on their earnings or their shareholder letter. Again, here, Q4 net loss was 667. It's always nice to share the source, so I just want to share it with you. So this is driven by a loss in their crypto asset investment portfolio, and they're buying more crypto at these prices. So this is pretty good. This is very bullish for your crypto portfolio. They're long-term very bullish. And this is their adjusted profit. And then here, this 5% is really important. Their $2 billion repurchase program, or their repurchase program, just got approved for another $2 billion. That's roughly if the stock had a 5% dividend, because you're guaranteed that this thing will eventually go up 5%, or adding 5% to your shares, right? If you own X amount of shares and there's now 5% less shares going around, you are now owning 5% more of the company by doing absolutely nothing. And that's what we love to see, because for a long time, I gotta say, I didn't like Coinbase the way they were treating investors. If we just come down to their financials, we come down to the income statement, you will see the diluted shares. Maybe I just gotta search for it. 1 second, shares. And let's go to the bottom here. So every year, this is years right here. So 2022, 23, 24, 25, there were more shares outstanding. So you were getting diluted. Your piece of the pie was getting smaller. And this was always one of those things I did not like about Coinbase, and why, was not crazy about being a long-term shareholder, because you were getting diluted. But now they are reversing that. I've loved to see that in companies. This is actually a very bullish sign. So if you just dig a little bit deeper, I mean, there's some gold nuggets here. Their cash flows are super positive. I love to see these numbers. The balance sheet is very aggressive. I mean, they have so much cash. So I love actually a lot what I'm seeing here. They have, let's scroll down here a little bit. Cash and cash equivalents, 12 billion, guys, or almost 12 billion, 11.3 billion. And then cash, like very cash is around 6 billion. You'll see that actually right there in their financials as well. Money and market funds at that 6 billion, and then overall right here the total. So looking really good, makes me very bullish. But again, you got to kind of time it. I don't think going fully in right now might be the best idea. We're just being a little bit cautious. We're following it, but overall, I like what I'm seeing, and I'm overall seeing a lot of bearish sentiment across the board, which kind of makes me a little bit more bullish. It's a little bit, pause off. Do you start, DCAing in right now? Maybe you could play this range trade just a little bit. Let me go here, scroll up again. So maybe we're going to be ranging here, making some sort of channel and get stuck here for a little bit. Maybe we're going to, and then eventually break down and find support and then curl back up, or maybe we're just going to, V-shape it right back up here. If we start V-shaping it up, we're going to be probably accumulating. Otherwise, we're going to be range trading for a little bit. The last charts I want to show you guys is twofold, or actually threefold. So USDC, their stable coin, that they spun off, but they're still big investors in, is the second biggest behind Tether. doing pretty good, and you can see the adoption is just going through the roof, and they are that new financial rails. They're basically going to be replacing PayPal in terms of financial rails, and AI agents are going to be using this. This is Coinbase is such a good play on so many different fronts. It's like an AI play, it's a crypto play, it's future of finance, a stable coin play. So it's really interesting. But this is a big reason we were not investing in Coinbase, because anything above 300 or even 200 for us was getting really, really top heavy. You got insiders selling like crazy. So again, there's a lot of red flags, but there's, I would say, a bit of an oversold narrative going on. So we are interested. We're on the sidelines. We're not yet invested. It's still a little bit more of a trade for us than an investment if we see an opportunity. But this is a ticker that is very interesting to us. So those are my 2 cents. Let me know yours in the comments below, and I'll see you guys next time. Ciao for now.